News when you want it. With Bloomberg News Now, I'm Amy Morris. And there's your closing bell for this Wednesday on Wall Street, where trade anxiety did help push stocks lower on reports that the Trump administration is weighing restrictions on software exports to China. Of course, we'll have much more on that coming up just ahead. But first, we want to bring you your closing numbers. We bring them to you each day here at Bloomberg. The S&P 500 lost 36 points. NASDAQ lost 213 points. The Dow lost 334 points. The 10-year Treasury yield at 3.95%. The 2-year yield at 3.44%. And Tesla posted third-quarter profits that fell short of Wall Street's expectations despite record electric vehicle sales. It's a sign of the pressure that automakers are facing from shifting federal policies and rising costs. Tesla shares are down more than 1% in the post-market. Back to the markets shortly, but first, the Trump administration has reportedly lifted a key restriction on Ukraine's use of some long-range missiles provided by Western allies. The Wall Street Journal reports that move will enable Kyiv to step up attacks on targets inside Russia and increase pressure on the Kremlin. And the U.S. plans to announce a substantial increase in sanctions related to Russia. Treasury Secretary Scott Bessent.
We are going to either announce after the close this afternoon or first thing tomorrow morning, a substantial pickup in Russia's sanctions.
The Treasury Secretary did not specify what these new measures would entail. The announcement comes after the White House backed off plans for President Trump and Russian President Vladimir Putin to meet in the immediate future. Getting back to the markets now, the Trump administration is weighing export restrictions against China that would bar the purchase of a wide swath of critical software. Bloomberg's Ed Ludlow says this is another possible hurdle for tech companies.
It's a playbook we're familiar with because the administration and prior administrations actually have used the mechanism of export controls on specific pieces of software against Russia, which was in the context of response to the war in Ukraine. That mechanism and how companies, American technology companies, might have to respond to it, there is a case study to look at.
Bloomberg's Ed Ludlow. The U.S. move is in retaliation for China's announced restrictions on the flow of critical rare earth minerals and new port fees on U.S. ships. Shares of Beyond Meat whipsawed throughout the day, gaining about 7% in regular trading. Shares stepped back from the surge that drove the price up more than 1,300% over 4 days as day traders piled into the stock. Shares jumped as much as 73% at the opening bell. Then trading was halted for a bit because of that volatility. Gold saw its steepest sell-off in a dozen years following a record-setting rally that echoes the 1970s. The 2025 gold market shares notable parallels with the 1970s: inflation, currency instability, and geopolitical risks. Bloomberg Intelligence senior commodity strategist Mike McGlone.
The problem with gold right now is it's so extended versus virtually every moving average. If it doesn't have a normal 20 to 25% drawdown from the peak, it would be very weird. That's why I view gold right here as very scary for the implications for what it means for other markets, particularly with crude oil dropping. The extent of that has never happened.
Bloomberg's Mike McGlone on Bloomberg Intelligence. Gold is clawing back some losses, now about 0.5% lower. AT&T reported third-quarter revenue narrowly missing Wall Street estimates, weighed down by heavy promotions to attract new customers in a highly competitive mobile market. Chairman and CEO John Stankey tells Bloomberg the impact of last year's sluggish iPhone 16 sales is starting to show up now in the company's growth.
You can only suppress that activity for so long, and there has been an increase over last year and maybe some other previous years. It's not a record-breaking cycle, but it's strong.
Hear more of our interview with AT&T Chairman and CEO John Stankey on the Bloomberg Talks podcast. AT&T shares lost about 2% in regular trading. The government shutdown is now the second longest in history. Members of the House Freedom Caucus and at least one influential Republican chairman are pushing for a long-term stopgap spending bill to end the shutdown. Representative Jason Smith is chair of the House Ways and Means Committee. He tells Bloomberg Television the bill extends extends to December of 2026.
I strongly support a longer-term continued resolution until December 1st of next year. That would allow more stability for our economy, stability for the American people.
Democrat Debbie Wasserman Schultz tells Bloomberg that is a non-starter.
It is outrageous that a member of Congress would suggest that we cede all the appropriations authority to the administration, that we do a one-year continuing resolution.
The shutdown's economic disruption will deepen as civilian federal workers are set to miss their first full paycheck on Friday. And then next week, November 1st, funding shortfalls and deadlines for health care, military pay, and nutrition benefits will all happen at once. Harvard University President Alan Garber said a larger tax on the school's endowment will hurt its ability to address problems the U.S. government wants it to be focused on.
In terms of addressing the problems that we are accused of, and that I believe was part of the rationale for passing the endowment tax, the tax is only going to make it harder to address these issues, not easier.
You can hear more of that conversation with Harvard President Alan Garber on the latest episode of Peer-to-Peer Conversations with David Rubenstein, tonight at 9 Eastern on Bloomberg Television. That's news when you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.